Hello. Welcome to the In Love with Business podcast. This miniseries is titled Chief Sustainability Heroes and is hosted by Professor Paolo Melina and Marlena Corvalia-Shore from University College London, School of Management. Throughout this series, we will talk to sustainability leaders from different organizations and sectors to learn about their sustainability journeys. We will ask them about their career paths, the challenges they encountered in implementing complex strategies of sustainable transformation, and what inspired them along the way. We will also ask what advice they would offer to aspiring chief sustainability officers. Enjoy the episode.
In today's episode, we are joined by Rhian-Mari Thomas, Chief Executive of the Green Finance Institute, an independent organization at the forefront of shaping how finance can be used to facilitate the real economy transition. Rhian has spent 20 years working in investment banking and corporate finance, and she was the first person to be awarded an OBE for services to green banking. Congratulations on that. She's a former member of the task force on climate-related financial disclosures, and she also co-chaired the launch of the task force on nature-related financial disclosures, where she served as a senior advisor since its launch in June 2021. She's also a trustee for the WWF here in the UK, and chairs the Independent National Wealth Fund Task Force. She's also an independent advisor for the carbon rating agency Be Zero Carbon, offering strategic advice on the future of carbon markets. She's a fluent Welsh speaker, and she holds a PhD in physics. Wow. From Trinity College, Dublin, Ireland. It's fantastic to have you on our show. Thank you very much for your availability.
Thank you so much for inviting me.
So,
thank you.
I guess my very first question to you is a simple one. We would like to, know more about your background and your path to becoming the CEO at the Green Finance Institute.
Sure. Well, I started, as you mentioned, in physics and then went into investment banking. And I mention that because I feel that life's come full circle and that green finance is very much about the application of science to financial decision making. And I genuinely feel I found my happy place. So more immediately, I really enjoyed my career in banking. Most of it was looking at structured finance, leveraged finance, helping private equity companies take companies private, before moving on to a number of leadership roles. Before finally, it was when the Paris Agreement was signed, and 195 countries committed to aligning their policies and their industrial strategies with, trying to limit global temperature rise to 1.5 degrees above pre-industrial levels, that it occurred to me that finance was going to need to be at the forefront of that transition, and that I had skills as a banker that I could actually put to work in something that I had felt very passionately about in my private life since my teens, but I'd never really figured out how you could be a banker and be an environmentalist, which sounds quite quaint now, given there are so many of us that thankfully are doing this work. But at that time, it was quite new to me. So I set about pivoting my career, and was delighted when the government, as it was back in 2018, agreed to put some money behind an organisation that would sit between the policymakers and the financial industry here in the UK to make sure that we really tried to mainstream green finance. So I was absolutely thrilled when I became the first founding chief executive of the Green Finance Institute. We set ourselves up in July 2019. It's gone really fast. COVID had quite a lot to do with it, of time. And I think at the time it came as quite a surprise that the strategy that I chose to pursue, with the backing of my late chairman, Sir Roger Gifford, who's a former Lord Mayor of London, and it has to be said, the UK government, who seed funded our organization, was rather than focusing on the regulatory aspects. And I know you mentioned in the introduction that I've worked very hard on sort of disclosures, because obviously data disclosure, transparency is a key foundational requirement in what we're trying to do to actually redeploy capital to where we genuinely need it to start, the transition in the real economy. But rather than focus the organization there, I wanted to do something that at the time seemed quite bold, which was look at finance not as a sector that needed greening. So not so much greening finance, but financing green. Using the finance sector as the facilitator for the real economy transition where we see emissions and where we increasingly see a need for adaptation. And really bringing that full creativity and ingenuity of the financial sector to support the other sectors in what they need to do to transform. And of course, our strategy at the Green Finance Institute since then has been very much we basically triage the policy, the finance, and the industrial and technology requirements to figure out how do we use public capital as efficiently as possible to crowd in private capital, and what are the genuine financial challenges that different sectors and different areas that we need to solve. We're now a team of almost 80.
Okay.
Mostly we're all experts in finance, but mostly former bankers, some asset managers, some policy experts. We're in 8 different countries. So another key feature that I really enjoy is making sure that we're sharing best practice and that we're learning from other jurisdictions, other examples of where things have been done well, and making sure we bring that back to the UK and share some of the successes we have in the UK across our global footprint as well.
That's fantastic. And I guess while preparing this interview, we saw on your website kind of the vision statement that speaks about we believe in a greener future made possible by finance. And you already alluded to this, but can you elaborate a little bit on the role of finance and banks and investors can play in facilitating these transitions in society?
So let me tell you, when you set up a business, everyone wants to talk to you about your vision so that you have a nice vision and mission statement. Believe me, you spend so much time at the outset getting the words right and getting the tone right. And I'm very happy with where we landed with having a greener future made possible by finance. As we look at different sectors and how they need to transition, whether we're looking at decarbonising homes or transport or investing more in nature-based solutions or in sub-Saharan Africa or sustainable aviation fuel, you name it, it's such a broad, we're looking at an entire global economy in transition, right? Sometimes the blocker isn't the finance. Sometimes there are other issues that need to be addressed. And obviously in the UK at the moment, we're having lots of discussions about planning and permitting and supply chains and skills gaps and all the rest of it. But finance always needs to be part of the equation. It's an absolutely critical facilitator. And that's why we wanted to say it's a future that's made possible by finance. It's not that finance is the be all and end all, and that's the only thing we need to focus on. It's just we need to be part of that whole jigsaw, and we play an absolutely crucial role. Something that not many people know, but in the COPs, the Conference of Parties that happen every year, there were, I think, 25 of them before it became something where the finance ministries were fully involved. Because it was viewed initially as an environmental problem, then as a broader policy problem. Yeah. And it's only recently that people have really seen the importance of actually working so closely with the financial sector and bringing the full strength of the capital markets to bear on this challenge. So that's what we mean by having a greener future made possible by finance. It's putting ourselves squarely into that whole mix, but recognizing we don't have all the answers. We're only part of the answer.
And then based on your experience and interactions with industry stakeholders,
Yes.
to what extent, for example, you think banks realize the full potential of this commercial opportunity?
Well, now's a really interesting time for us to be having this conversation because clearly we're seeing a number of very influential, globally systemically important banks walking away from things like the Net Zero Banking Alliance,
Mhm.
where they had originally made commitments back, I think, around the sign of COP26, so a few
Yeah,
years ago now,
exactly.
to align themselves with the net zero goals. I don't think the banks are pulling away from those net zero goals per se. They recognize that this is the direction of travel. This is where profits will be made in future. These are the industries that they need to familiarize themselves with and partner with and help to finance. What they appear to be having difficulties with is, and this is my take rather than theirs, is we've tried to overlay a political process into the way that markets and financial institutions work. I was a banker for many years. You wouldn't make an announcement about a deal before you'd actually signed the term sheet and you figured out how you were actually going to fund it. Politics is a very different beast. Politics is about creating norms. It's about shifting what is acceptable to the electorate, and such that there's a phrase called the Overton window, which is used in politics, and it's about that sort of frame of what is acceptable at any one time in a political environment. So a lot of politics is about making announcements that may be aspirational, that may not have the whole execution plan behind it when the announcement is made, but it's actually trying to create that norm, create the momentum, create interest, so that actually when we do turn around and say, we're going to actually have an entirely clean energy, generation in the UK by 2030, that becomes an acceptable statement, which 15, 20 years ago would have seemed fanciful. But you can clearly see the tension between the way financial industry works and politics works, and we need the two things working hand in hand. So yes, it's a difficult time at the moment. Answering your question, a lot of naysayers and others are pointing at this sort of, bump in the road, where we're clearly seeing some chilling effect, both in the geopolitics around this agenda and in the way some financial institutions are engaging with it. But people that work in finance, on the whole, are pretty smart people. They will go where the profits are to be made, where the risk-adjusted returns are to be made. They're keeping a very close eye on what needs to be done. Some of them are innovating, and that's fantastic. Otherwise, others are, maybe less so. But this is a conversation that's for the long haul. This is based on science, as we all know, and climate change, unfortunately, as much as we'd like it to be a cyclical trend, as much as we'd like it to be a fad, is unfortunately based on inviolable laws of physics. It's thermodynamics. And so any concerns that we might have about antitrust regulation or anything else, it really doesn't hold a candle to the laws of thermodynamics. We're going to have to yield to those. They won't yield to us. So this isn't an issue that's going to go away, even if people are more excited right now about the investment opportunities in AI. The investment requirements in climate mitigation, adaptation, and increasing, as we're realizing, in nature-based solutions, and actually, avoiding the continued depletion of natural capital. These are all areas that can't come off the table. We're going to have to address them.
So Rhian, you mentioned how finance has, relative to the whole conversation, how it's been recently weaved into the whole sustainable transformation discussions, like within the last 5 or so COPs. So when you think about the future and where sustainable finance is going, what are the tensions for growth? And based on your experience and what you're seeing, what are some of the tensions and barriers? I know you touched on the geopolitical and the political agendas, but yeah, what do you think are the biggest barriers for growth going forward?
Well, if you mean the growth of sustainable green finance and the deployment of capital towards the agenda that we're so passionate about.
Yeah.
Yes. I think if we were to boil it down to one fundamental issue, it is that in order for money to move in our current system, it needs to make money. And what I mean by that is the risk-adjusted returns need to be competitive, or at least comparable with the risk-adjusted returns that can be derived from, frankly, from sectors and business that is familiar. And if it isn't, it shouldn't come as a surprise to anybody that the money doesn't move in that direction. And in that regard, the finance industry is no different to any other industry, right? It's honed itself into efficiency. You have entire organizations that are structured and with individuals that have been trained to do what has made the industry very profitable over a long period of time. And we're turning around now and saying, actually, you need to pivot some of that. You need to look at new sectors, new business models, disruptive sectors and models in jurisdictions that maybe you're not familiar with, where there isn't much, sometimes no performance data. You can't extrapolate what's happened in the past and feel comfortable that you can predict what the future will look like and that you'll just capture a share of that market. This requires a different way of thinking. It's far more entrepreneurial. Mm-hmm. And that's what we're fundamentally asking people. What it really boils down to is we're saying to people, you need to take a different view of risk. And that is a really, really tough ask. And that's what we're finding is actually, if you ask me what's the obstacle is we have too few people who are willing to take that risk. And I see that not just in some of the mainstream financial institutions, but we see it in some of the public sector architecture that is meant to be supporting it. We see it across policy making. We see it in industry. And therefore, being able, and it's completely understandable. It isn't a criticism. It's just it's a feature of us having to actually make some really profound changes to the way the economy works and the way we finance it.
That ties in a way to sort of the title or theme of our podcast, which is Chief Sustainability Heroes. So it sounds like there's really that need for that bold, fearless leadership.
You're right, but that's also a bit of a concern, which is, we're not going to solve this challenge through the tenacious efforts of, heroic individuals. We do need those heroes, and we know we need those role models. We need people that inspire us to do what is at times pretty tough, and it sometimes feel quite lonely and unappreciated work. And I think that will resonate with a lot of people. But the changes need to actually be systemic.
Yeah.
So, in any organization, you can't have a team that's sitting away from the main decision makers, away from the way that the organization operates. They might be doing a fantastic job, but they can't do it in a silo. It actually has to be integrated into the way the whole organization works. And that's part of the challenge.
Yeah. Okay. And I really like what you were speaking earlier about how, and I guess it's perhaps a reframing. So instead of green finance, you're financing green. So can you share with us some examples that you're seeing that banks are doing that are leading in this area? So some initiatives or things that maybe you've been involved with directly at the Green Finance Institute?
Okay, so two questions in one. One, we're seeing things that I'd like to shout out that I see the banks are doing well. And I really like focusing on banks before we get onto the stuff that my team do, because that's a far longer conversation. But I'm really glad that you're focusing on the banks, actually, the two of you, because when we talk about this particular challenge, I'm quite passionate about us focusing on deployment of primary capital, as in money that actually goes into the projects, into the companies, into the actual things that we need to invest in day to day in the real economy. There's a whole secondary market out there about investing in, equities and other things that are also important. And we've seen the importance of stewardship and the importance of investors in using their voice and their platform. But fundamentally, the speed at which we've got to work in this arena genuinely means we need to focus on primary deployment of capital, real assets. And that's where the banks have such a critical role to play. as do other real asset investors, like the venture capitalists, private equity, etc. But anyway, coming back to your question, some of the things I'd really like to shout out from the banks. One of the banks that I think, and this is tough actually because we work with a lot of the banks, so I'm going to limit it to two. The first is a bank that I think has consistently been pioneering in the way they are engaging with clients and the way they're thinking about their policies, and that they're doing it in a robust way, and that would be ING. The Dutch bank. They were very quick to embrace this agenda. And yes, they work closely with their clients on helping clients transform and transition their businesses, but they're also pretty robust at holding those companies and clients accountable and making it clear that, they're there to support, but ultimately they're on their own journey and they're pivoting. And if those clients aren't showing an attitude towards aligning themselves with the Paris Agreement and aligning themselves with where we need to get to on net zero, then fundamentally they probably aren't the right sort of client for the bank. And they've done that in such a powerful way. And as I say, they were one of the first to do it, and I think they continue to trailblaze. So they get a big thumbs up. Also a real pleasure to work with. The other organization I think that's doing something really interesting is Standard Chartered, under the leadership of a genuine sustainable leadership hero, or whatever you want to call her, Drew, who is their chief sustainability officer. I've known Marissa for many years. She has a leverage finance background, and she was already a titan when I started in leverage finance many years ago. And they've got really interesting innovation and really looking at, genuinely creative solutions, be that from the work they're doing and they've obviously got a very interesting footprint globally, where they're having to operate in a number of different jurisdictions where this whole agenda has got very, very different challenges. So, some of the work that they're looking at in helping decommission coal out in Asia, through to some of the nature-based solutions that they have been developing with, many different partners, including in civil society. It's just an interesting lab that's coming up with a lot of interesting and new innovative ideas. So it's always a pleasure to work with them. I'll leave it there because I could go on all time. Talking about some of the stuff that we've done at the GFI. So I think it falls into two buckets, really. The first is really about institution building. So we're very proud of the work that we've done to help initially set up the Task Force on Nature-Related Financial Disclosure. They sit on our platform. And so we've been delighted to host the Secretariat, and the success that the TNFD has enjoyed in genuinely creating a global movement, thinking about both the risks and dependencies that corporates and finance have when it comes to the natural world. I think at the COP in Colombia, we announced that over 500 signatories around the world have now adopted the TNFD, and that number continues to rise. I think the latest is the Bank of China has signed up, and which is a fantastic new step. So congratulations to the whole team there under Tony Goldner and Emily McKenzie. And we're very proud of the work that we did in helping in the initial stages of getting them launched. We did some similar work to help set up the Integrity Council on Voluntary Carbon Markets. So again, turning what was fantastic work that had already been done by a task force, helping it be operationalized, helping figure out how do you turn some of these goals and intentions into genuine organizations that can work towards outcomes and do such great work. So very pleased with our continued work with the ICVCM. And then on top of that, things like I was recently chairing the National Wealth Fund Task Force here in the UK. So advising the Chancellor on how to set up, and they've now capitalised £27 billion in the National Wealth Fund, and changed the mandate of that organisation from the former UK Infrastructure Bank So again, bringing something quickly to market so that it can actually be impactful and support the private sector. It's still early days with the National Wealth Fund's new mandate, but we remain hopeful that they are really going to help crowd in that private capital and transform UK green infrastructure. And similarly, we played a hand in the government's Green Gilts programme alongside, I shouldn't probably say, but with the LSE and partners at the Impact Investing Institute a few years ago. So again, that's turned into a successful Green Gilts programme. So those are sort of some of the more macro institutional type projects. Some of the other projects that we've worked on directly that may be of interest to your viewers are things like how we, under our BUILT programme, have catalysed the green mortgage market in the UK. When I first started at the Green Finance Institute, there were only 3 green mortgages in the UK. One of them we launched at Barclays, which I led with Emma Harvey-Smith. Emma came to work with me at the Green Finance Institute, and under her leadership, running our built environment program, there are now over 60 different green mortgages across the country. We think they represent around 5 to 6% of the mortgage market. And it's been a really instructive exercise in learning about, it's not just good enough to put an example out there and say, look, we did this once, why doesn't everyone copy? You actually have to work quite closely with other market members in order to overcome some of their barriers and help get them comfortable so that these things can be replicated and can be scaled. So we've still got a lot of ambition in that built environment space, but we're delighted that we succeeded in that original task and objective. The other thing, we've been working with the UK government on setting up investment readiness funds for nature. I think there are something like 200 companies that are availing of those grants that are out there now. But the thing that I thought, and I'm very proud that we did, and I'm going to take full credit for Helen, who's my colleague's brilliant idea on this. I get to do that because I'm the boss.
Yeah.
But Helen and the team had the great idea of these companies that were availing of that government grant funding. We should capture in real time their journeys in actually how they were starting to monetize some of their activities so that they could actually set up nature markets and take advantage of those new opportunities. Mm-hmm. And so we set up these toolkits originally for developers, then for farmers. I can't remember the hits we've had. I think at Christmas it was something like 70,000 hits. It was a lot of people had looked at that, and we've created a real community around that, with real-time data as people go through their journeys, availing of that capital and following a path that we've helped set out to help them on their journey. So I'll leave it there. There's quite a few things. This podcast will go out and various team members will really go, why didn't you mention my project?
Yeah. We'll have to have a second edition.
Yeah. I'm going to mention local climate bonds so I don't get in trouble with my colleague Miles. So that's we're working with Abundance, the crowd sourcing platform, good friends of ours over there. And so we're working with local authorities in the UK to help them crowdfund from their communities to invest in local climate bonds, which then get invested in community projects. We've done 12, I think now, raising around £10 million. And they're proving very successful, and we're delighted at trying to roll that out across the whole country. So I've mentioned that one too.
Wow.
Amazing.
These are really good stories. And I guess I have two follow-up questions. The first one is, to what extent do you see these organizations engaging with you, driven by, I guess, a genuine driver of sustainable transformation versus the traditional CSR? Question number one. And I guess, in the space of sustainable finance, we have seen in the past years organizations accused of greenwashing. Is that something that you perceive is still a problem out there? Is that impacting your activities that are genuine efforts to drive change? What's your take on that?
So thanks, they're both great questions. The first one about CSR. CSR teams do a load of great work, and I've got lots of ambitious ideas about what CSR could do in addition, if I'm honest. But we don't tend to work with CSR teams because very much our mission is around actually demonstrating that there are attractive risk-adjusted returns that can be made from investing in this sector. By that I mean the whole, net zero, clean energy, etc. Because that's the way that we will generate genuine sustainability. Is we need to, if we actually want to go to deploying the billions and then the trillions towards this agenda, that's not going to happen if it doesn't make money, not in the current environment, not in the way that our current systems work. So we have to demonstrate that this is something that's viable, that aligns with the way businesses make money and think about how they operate. I'm really glad that there are super smart people out there, some of the economists like Kate Rayworth and Mariana Mazzucato and others, who are thinking about alternative economic models, because obviously the economic models we have at the moment are flawed. With the, we're not pricing in the externalities into valuations, short-term decision-making prevails, etc. But unfortunately, given the urgency of this agenda, we have to work with the world the way it is, not the way it should be. And that is what my skills as a former banker is. I know how to do transactions. I know how to make things happen within the existing system. So we will continue to try and push in that direction whilst also supporting all efforts to figure out, is there a better new economic model that will ensure that we can finance, stop ourselves financing ourselves into extinction as a species, I guess. That's quite a big ask. So the answer to you is, we work with the deal making teams. Good. We work with the guys who are there trying to make money. I do think the CSR guys could do even more, though, in terms of helping create those enabling conditions that would enable organizations to make more money. I call it the Paul Polman Toilet Challenge, which is when Paul Polman was the ultimate sustainability hero leading up Unilever many years ago. He used some of his CSR budgets to build toilets in some developing countries. And his idea was that if you build a toilet, then those toilets, you're going to need disinfectant and soap and a whole bunch of other products that Unilever provides. And even though he was opening up a market that all his competitors could also try and avail of, he was backing his own distribution and his own supply chains to be able to take advantage of creating those new markets. Now, I don't know what happened to that plan. And I don't know if it was executed as he had intended, or I'm sure maybe some of your viewers will be able to update. But the principle is the bit that appeals to me. It's the idea of how can we maybe use that CSR budget to create those kind of new asset classes, knowing that you won't make financial return on that CSR money, but you're creating a new opportunity for the deal making teams right across the industry, and that you can just back yourself that actually.
And that's a great example of long-term thinking, right?
Yes, exactly. So anyway, so that's a digression into Paul Polman's toilet. But your second point was around greenwashing.
Yeah.
And it's a constant.
That must be frustrating for you, right?
It's a constant challenge, isn't it? So there is some greenwashing that is clearly cynical. And for that, one of the pieces of work that we had been spearheading at the GFI was working with the UK government on creating a green taxonomy. So a list of what is green and what is not green. There are something like 48 different taxonomies around the world. We don't have one in the UK because obviously we opted out of having the European one. And so we did a fair bit of work advising government, working with the market on how do you create that taxonomy that provides that absolutely key sort of foundational stone of helping people understand what is green and what is not green, and do it in a way that's interoperable with the other markets, and ideally do it in a way that is not so technocratic and bureaucratic and administratively burdensome, and sort of learn the lessons that we've seen in some other jurisdictions. So I think that is out to consultation at the moment, and so that's my practical contribution towards how do we stop greenwashing. We do it by providing people with guidance and providing clearer lines around what is acceptable. But then equally, I've had conversations with people who are, rightly holding finance and corporates' feet to the fire, making sure that they are genuinely delivering on what they say that they're doing. But some of that activism has ended up with a bit of a chilling effect, with speaking to people, especially in the banking sector, who say, look, we've tried to do, be bold. And, we stuck our head above the parapet. We tried to go first. We tried to show some leadership. And yes, it wasn't perfect. And yes, it was maybe only 80% of where we needed to get to, but we got castigated for it. And, people chose to find fault rather than try and encourage. And as a result, it's made it just that much harder for some of those organizations to continue with the next initiative and continue to pivot their businesses. And that's a really, really unfortunate issue. I mean, I'm not an apologist for the banks.
The switch to greenwashing, basically.
Yeah, exactly. And it has led to the green hushing. But even worse than the green hushing, because green hushing is about when you still do the green thing and you don't say you're doing it. This has led to it being that much more difficult to make the business case internally that it is, for ages we've said, you need to do this in order to maintain your social license to operate. You need to do this because consumers and the electorate are going to they won't engage with your brand. They won't engage with your mission unless you are seen to be doing this and do it genuinely and authentically. That all those arguments are correct. But when that data isn't coming through and you're not seeing that evidence, in fact, you're seeing the converse, which is you're seeing people call you out for being a hypocrite or call you out for not moving fast enough, then it makes it that much more difficult to take the next step. So it's getting the balance between those two things. It's really hard.
And before you you spoke about the role of banks.
Yes.
What is your opinion about other players in the financial community, like, for example, PE firms or impact investors? Do you think they play a role and it's an important role, or is more about banks?
It's about all of the above, right? We need the entire finance industry to be fully involved. The private equity has a really interesting model in that, they've got a lot of portfolio companies. They look to improve on their profitability and, sell them on in 7 years. 7 years is a long time when we're looking at climate change and at the rate of things are changing at the moment. So it's like they've got a huge agency in making sure that their portfolio companies are starting to align with the requirements that we need in terms of the Paris Agreement. So I think the private equity could be such a force for good. It could also, unfortunately, be where companies that no longer want public scrutiny on this agenda can receive private capital and do that away from the public gaze. And we really need to make sure and caution against that happening. But you amongst the other investors, you didn't mention, for example, the insurance sector. They've got a huge role to play in all of this. And it's fantastic to see some organizations such as Howdens and others really waking up to the fact that the insurance sector have such a crucial role to play. And we're seeing some really interesting new models actually, there are a couple of boutiques out in the States that are hiring lots of engineers and technologists to actually really look at the perceived risks of some of these new first of a kind technologies so that the insurance sector can play a greater role. And so this is an all of the above. And I'm not going to exclude from that the role of philanthropic capital.
Yeah.
Huge role to play. The government money. Huge role to play.
And
this is about actually galvanizing the entire financial sector and making sure that we're all working towards similar outcomes. But guess what? That doesn't happen by osmosis, right? It's not going to happen by magic. You need to put the right institutional structures in place to bring these organizations together, drive people towards the outcomes that we need, define what they are, get rid of that greenwashing issue by actually just saying, this is the industrial strategy we need to be pursuing. These are the investments we need to make in order to, maintain prosperity and have a just transition and create jobs for people. And these are some of the barriers to investment that we need to get over by using all these different parts of the financial system working in concert.
Yeah.
That's starting to sound a bit like how the world should be rather than the world is, but we're doing our best to try and convene and triage those groups, and having a reasonable amount of success at doing it as well, I'd like to say. The idea that we're all going to undertake this absolutely profound transformation that affects every sector of the economy, affects trade flows, affects geopolitics, and we were going to do that without any boulders in the stream. There was always going to be setbacks. There were always going to be things that was going to make this a little more challenging. The issue we obviously have, as those of us who respect the science, is that we know that we don't have all the time in the world, and that, the costs of inaction and the cost of delay perversely are going to be far greater than the costs of action. And it is hugely frustrating. But this is a time to double down. This is a time for us those of us who are working in the field, recognize that there are additional challenges, recognizing that things are changing around us, change our narrative, maybe change our approach, focus on what is working, double down on the things that are working, keep going.
Keep going. I think that's really good and wise advice. So sustainability is often described as a journey. And as you mentioned, this journey is not linear. It's anything but. So when you do come across those, boulders in the stream, as you mentioned, how do you stay motivated? And then also, how do you keep your team motivated?
So 2 different questions. I get a lot of my personal energy and motivation from my team, which is actually quite selfish. But they are an incredible group of purpose and mission-led individuals who bring all their expertise to this challenge every day. And it's a joy to work with them and a real privilege to lead the organization. So I genuinely get huge amounts of motivation and energy from speaking and working with my team. Often some team members come to me and, this is a tough journey. You're right. I know quite a few members of the team, they won't read IPCC reports anymore. They deliberately keep away from the climate science because they were finding it too difficult to stay motivated. And my advice always, when anyone comes to me and they're starting that sort of slight burnout, slight lack of motivation, say, go and speak to some of the entrepreneurs, go and speak to some of the scientists or the engineers who are coming up with the solutions that are actually going to be the solutions of the future. And luckily we know plenty of those in our GFI network. Those are people who, by definition, are looking at the world and seeing opportunity, and they're pursuing them. And that gives them a sense of hope. So that's always my advice. But you're quite right to ask the question. You need to be, those of us who are working on these things, and I absolutely take my hat off to the climate scientists who've been working on this for decades, and how they manage to continue to stay motivated and positive, I think is a real challenge, and it's a huge testament to the work that so many of them do. Yeah. But we all actually do need to be very mindful of our well-being and actually put strategies in place that work for us as individuals so that we can continue doing this work. It isn't easy. And, as we see, as we're recording, we're seeing the impacts in Los Angeles, people losing their lives, people losing their livelihoods, entire communities burnt to the ground. It's desperate.
Yeah.
And unfortunately, it is possibly an indication of a new normal. And there's that awful quote that's going around at the moment that climate change is something we see on our phones until we end up recording it ourselves. Isn't that awful?
Yes.
And there's something really troubling and profound about that. But look, we can just do what we can all do, which is apply the skills and our energy and our knowledge and all our experience towards what we do best and aligning it with the agenda. That's all we can do. And acknowledge every day that we've done our best.
And maybe one very final question for you. I guess, we spoke about climate action, and you're absolutely right. This is probably one of the biggest challenges we have in society, and is a challenge that comes with a countdown. We cannot. We don't want to overcome the climate tipping points because when that happens, then we can go back and the natural system is affected forever. So I guess we are aware that we need to act, and we need to act fast. At the same time, I guess we are probably not moving with the speed we should be moving. And I guess, for example, 2024 was, an interesting year, probably the first year where we saw, large corporations, for example, pulling out from the Science-Based Targets Initiative, which probably is not a good sign for us, right? So I guess, are you optimistic about the future? And kind of the type of role the financial community and industry will play in building a better world, or are you pessimistic about us getting there in time?
I get asked this question all the time. Am I an optimist or am I a pessimist? I'm going to go. There's Amory Lovins, who is a physicist and climate pioneer, set up the Rocky Mountain Institute in the States. And he years ago answered this by saying that he's neither of those things, because they assume a fatalism. So a pessimist assumes that regardless, everything's going to get worse. And an optimist assumes regardless, everything's going to get better. So he always answered this question by saying he believes in applied hope. So things can get better, and you hope that they're going to get better, but only if we make them so. We have to apply ourselves. And so that's a mantra that I believe in quite strongly. I believe in applied hope, and I believe in how the financial industry can play its role in applied hope. And I obviously am dedicating the rest of my career and whatever skills that I have in order to try and make that happen. I completely noticed that that's a swerve of your question. You mentioned some very troubling trends that are happening across, both corporates and financial institutions. And yes, people are walking away from some of the big tent initiatives, some of the bigger commitments, some more politicization, if you like, of the agenda. I'm not entirely sure it means that they are walking away from the fundamentals of what they're doing in their own organizations, of actually recognizing that this is the direction of travel and pivoting their internal strategies in the right way. So I think it's far too early to just look at some of those macro media signals and conclude that some of these organizations aren't continuing in the right track. We haven't seen the data for 2024 yet, but I'm very interested to see the annual figures that come out of Bloomberg New Energy Finance on global capital flows. Obviously, 2023 was a record year, $1.8 trillion, up on previous years. Obviously, a lot of that money invested by China. but seeing across, the globe, what is, that's ultimately the data point, and the ultimate data point is what's happening to actual emissions and carbon dioxide levels. But in terms of finance, that's a key data point. Is despite the rhetoric and despite some of the media headlines, are people still investing? Are we still seeing money flow? I suspect the answer will be yes.
Excellent. Thank you very much. I really love this concept of applied hope.
Yes.
I guess it's one of the most original answers we got to this question.
Yes.
Well, I just wish it were mine, but
it's good. It's good.
Not smart enough to think about the answer. At least be smart enough to recognize when someone else has done a good job.
You're allowed to reuse in the context of sustainability.
We're going to promote this concept in future interactions. So thank you very much for your time. I think this was a very interesting conversation that our followers are going to enjoy listening or watching. And real congratulations for the good work you are doing. It's quite impressive, and we wish you all the best.
Yes, thank you
so much. It's been a pleasure chatting with you.
Thank you very much.
Thank you for listening to this episode. If you enjoyed this discussion, we invite you to like and share this episode on your social media. Enjoy the rest of your day.